average of many around 3-4 months. So yeah, it is and it is lower than the previous day as well. For DI, it is around 66.8%.
Pulkit for taking us through that F&O setup this morning. But now let's also take stock of all the stocks that are going to be in focus in today's trading session. And for that, we are now joined by Sharad, Srishti and Ravinder to take us through all the stocks that will be buzzing in today's trade. Sharad, let's start with you. Which are the stocks on your list?
Focusing on earnings, LIC Housing Finance delivered a mixed set of numbers coming in, but for FY26, the NIM guidance has been maintained by the company, ranging between 2.6 to 2.8%. Looking at the baseline numbers, net interest grew by 4%, but interestingly, PAT jumped almost 20% on a year-on-year basis. Tata Power, strong Q1 numbers coming in. Two important reasons: the ATC losses have reduced for the Odisha Discom, and also the sales mix has improved, actually aiding the operating profit margins when it comes to the solar manufacturing segment. Net profit jumped 9% on a year-on-year basis. Net, the numbers have been strong, and some institutional buying is expected to be seen as well in the stock. Delhivery, strong set of numbers coming in. Stock has also rallied recently. Express parcel revenue grew 10% on a year-on-year basis on the back of a volume growth of 14% year-on-year basis. Most of the elements which were there, the revenue, PAT, EBITDA margins, beat analyst estimates as well.
Okay, so Delhivery, LIC Housing Finance and Tata Power in focus on the back of their earnings, but that's not it. Several other companies also reported their numbers. Srishti, Federal Bank, ITC, how are their numbers?
All right, so let's start with ITC then, and it's kind of a mixed scorecard coming in from ITC this time around, where in terms of the revenue, which has seen a jump more than 20% on a YY basis. That's a little bit of beat versus our estimates, while profit, a slight miss is what we are seeing because they are absolutely flat on a YY basis. The margins too managed to miss our estimates as well, because on a YY basis, it's a decline of more than 500 basis points. But in terms of the segmental revenue, it's the cigarette business performance that has actually beaten our estimate as well. And the management does see that there are early signs of recovery in the urban consumption demand that were actually visible in the quarter. So sort of a mixed bag coming in from ITC. But when it comes to the Federal Bank, not an impressive set indeed, because there has been a sharp increase in the slippages and the credit cost that was driven by the MFI as well as business banking segment. The management has guided for a 5 to 10 basis points of NIM decrease in the Q2 of FY26 and the credit cost of 55 basis points for FY26 estimate as well. And in the earnings as well, what we are getting to see is a bit of a deterioration when it comes to their asset quality, while the profit has declined almost 15% on a YY basis. Along with that, we also have the numbers coming in from ABB. Not a great set again, because the operationally weak numbers is what the company has posted. Other than that, the revenue has come in line, while for EBITDA as well as the profit figure, that's a miss versus our estimates, while the board has given a nod for a wholly owned subsidiary for their robotics business as well. And especially look at the dip in the margins in terms of the numbers, because from 19.2% in Q1 of FY25, that has now shrunk to 13%. So a sharp decline in the margins as well is what we are seeing. So not a great set coming in from ABB, so all eyes on that.
All eyes on all those earnings counters. But Ravinder, now coming to you, which are the stocks on your list? Several oil counters as well as textile names.
India and ONGC can be in focus, where OPEC plus countries members has agreed in on the another bumper oil production increase for the September, and 8 countries to hike September output by 540,000 barrels per day. So back of this, keep an eye on Oil India and ONGC. Apart from this, textile stock, marine, food stocks can be in focus in today's trading session, where Indian exporter from the various sectors including food, marine and textile has sought financial assistance and affordable credit for the government to cope with the 25% Trump tariff. Apart from this, keep an eye on Torrent Pharma, where US FDA has inspected company's manufacturing plant at Vizag, Andhra Pradesh from 28 July 2025 to 1st August 2025, and the inspection has been concluded with a zero observation. And lastly, keep an eye on Railtel Corporation of India on the back of their order win, where company has received order from the BSNL, and the order worth is rupees 166 crores. So back of this, Railtel Corporation of India can be in focus.
Back of that order win, we have Railtel that will be in focus today. Rabinder, Srishti, Sharad, thank you so much for taking your time out and helping us understand which are the stocks that will be in focus this Monday morning. But shifting focus then, and let's also bring in Abhishek Gaushande, who is the head of research for ET Now and ET Now Swadesh. Abhishek, morning, and thanks so much for joining us. But first up, let's discuss what is the market setup looking like for today's trade.
So broadly, if you can see that in previous week the market has ended in a rate with almost a loss of almost 1.1%, but this was not the story. The thing is that market has been ending in the rate for previous last 5 weeks, and in last 5 weeks the Nifty has lost almost 900 points. This is quite significant because it is a correction of almost 3 to 4%, which has not been sounded so high. And the key thing, and it has been coincided by the continuous FI selling. So if you can highlight here is that in July the FI turns negative again after a 4 consecutive month of buying. Again, the earnings season so has not been so much robust. If you can say that we haven't seen big bang upgrades in the earnings, even in the banking system. If you can see that the numbers were quite muted. NBFC, it's a kind of a disappointment. IT has been worst, if you can say, and the manufacturing, so far the manufacturing companies who have been reported numbers, the numbers have been quite mixed. So considering that, and if we add on the global setup in which the uncertainty has been still continue, I can say that the in near term market will remain in a range bound with a quite negative bias. Further, if you can see the cues from F&O, which Pulkit has just mentioned, that that largely it has been a short build up kind of a thing we have seen in the Friday session, and further the market is quite appearing in the hand of in the hand of a weak hands. So so the FI's positioning come around 8 to 9%, while the DI is over 60%. That has been consistently increasing, and next the event which we have to watch on from here is this outcome of RBI MPC meet, which will likely to come on the 6th August. Broadly, we don't expect that a material rate cut would happen, but the RBI's commentary on the liquidity and the containment of this inflation would matter here.
All right, so that's how the market setup is looking like, and all eyes on the RBI policy outcome on the 6th of August. But
if you like this video, then like, share and subscribe to ET Now.